Dear students, today we can discuss about one more problem related to accounting equation. So how every transaction will affect accounting equation. Okay. So as you all I said, when you're writing heading, we can write statement showing balancing of accounting equation. First column transaction, second asset is equal to capital plus liabilities. Okay. Same way as we all discussed before. So first transaction is commence business with the cash rupees 1 lakh and goods rupees 50,000. That means owner brought 1 lakh rupees as cash and 50,000 rupees as goods. So cash and goods means a stock. So cash and stock both are assets. So asset side we will write the two heading, cash 1 lakh rupees, stock 50,000. So he brought 1 lakh rupees cash and 50,000 stock. So 1 lakh plus 50,000 total capital investment by the owner is 1 lakh 50,000. So we will write in capital, liability side under capital 1 lakh 50,000. Okay. Now second transaction, sold goods costing rupees 30,000 for rupees 35,000. That means 30,000 rupees goods we sold for rupees 35,000. Nothing mentioned in the question, that is for cash. Okay, otherwise name only mentioned, it is on credit. Here name is also not mentioned, for cash also not mentioned, then it is for cash. So 30,000 goods we sold. So stock will decrease 30,000. So from the stock 50,000, we have to minus 30,000. Okay. We sold for rupees 35,000. So we getting cash. So add to cash 35,000 we are getting. 30,000 goods we sold for 35,000 means 5,000 is the profit. Profit we will add it to capital because it is increase the owner's equity. Okay, so 1,50,000 capital, 5,000 profit we will add. So now total 1 lakh plus cash 35,000, 1,35,000 cash, 50,000 stock, from that 30,000 sold, balance 20,000 stock, 1,50,000 capital, 5,000 profit we add, 1,55,000. Next transaction is traveling expense paid rupees 1,000. So we know every expense will affect both cash and capital. So cash gone, we paid expenses, that means traveling expense we paid, cash is going 1,000. So from the cash 1,35,000, 1,000 rupees we will minus. Every expense, it belongs to expense of this year. So this year it will affect the capital. So it will affect the profit. So profit will come down. So it is a loss. So that's why from the capital owner's equity also will come down. So 1,50,000 capital minus expense balance 1,54,000. So now cash is 1,34,000, stock is 20,000, capital is 1,54,000. Now next is outstanding telephone expenses rupees 2,000. Outstanding telephone expense means this year telephone bill is pending to pay. It belongs to this year, we not paid yet. Okay, that is outstanding telephone charge. Pending to pay means it is a liability for us. So liability side we will write separate heading, outstanding telephone bill. How much rupees? 2,000. Okay, so outstanding heading we have to write in the liability side, outstanding telephone bill. It is 2,000. It is the expense, outstanding telephone expense. It is the expense of this year, we not paid. So this year expenses, it will affect the profit. Profit will come down, so it will affect the capital. So 1,54,000 minus 2,000 telephone bill outstanding, balance 1,52,000. Now cash is 1,34,000, stock is 20,000, capital become 1,52,000 and the outstanding telephone bill is 2,000. Okay. Now next transaction we can say prepaid insurance rupees 3,000. Prepaid insurance means insurance of next year we paid this year. Okay, we paid insurance advance. So any advance expense paid, it is a benefit we will get in next year only. So it belongs to next year. So it is a asset for us. So prepaid insurance we will write asset side separate heading, prepaid insurance. How much prepaid insurance? 3,000. So any expense paid in advance, it is our asset, current asset. So prepaid insurance asset side we will write separate heading, 3,000 rupees advance. We prepaid means cash is going from us. So how much insurance we paid? 3,000. So advance paid means cash is going from us. So 3,000 we will deduct from cash. It will not affect capital because it is not the expense of this year. It is the expense of next year. Okay. So 3,000 cash will decrease, as well as prepaid insurance in the asset side we will write 3,000. Now when you adding 1,34,000 cash minus 3,000, cash is 1,31,000. Stock is 20,000. Prepaid insurance 3,000. Capital 1,52,000. Outstanding expense, outstanding telephone bill 2,000. Now last transaction, interest received rupees 1,500. Interest received means it is an income. Every income it will come in cash as well as capital will increase. Remember, okay. Every income or revenue, both cash and capital will increase. So 1,31,000 plus 1,500 interest received. Now cash become 1,32,500. Stock remains same 20,000. Prepaid insurance 3,000. Capital 1,52,000 plus 1,500. 1,53,500. And outstanding telephone bill 2,000. So after all transaction we have to total both sides. This side total will come 1,55,500 and this side also 1,55,500. So from this we got for every transaction what is remaining same, asset is equal to capital plus liability. Okay. So this many questions are enough for understanding the concept. So practice this well. Okay. Thank you so much.